Hey there, good morning everybody. Christopher Inch with Texas West Capital. We've made it through another week. It's just a few minutes after 11 a.m. Central Standard Time here on Friday, the 23rd of April, 2021. In beautiful, though overcast and getting ready to be stormy, Bernie, Texas. Hopefully you guys have a better looking day out there, though, here in Texas we can't ever really complain too much about the rain. We've been in this kind of drought thing for a few years now. So, I don't know. I kind of like the sun out there, but I definitely don't like the drought. So there's what it is. Hopefully you guys are doing all right. Who's here already? Crypto Mowgli, what's up? Hank's here. Excuse me. Mark, what's up, man? He's checked in here as well. Lamb is over here. Nevlusian Data. Tell you, Ryder, what's up, man? Good to see you guys. Mr. No-Go, hey there, buddy. Spiral Architect is here as well. As you can see, a lot of the same people every day because, well, I hope to think that it's because they have good taste, but it is what it is. I'll take what I can get. At least they're showing up. So anyway, and hello to everybody out there who, maybe isn't feeling the whole, chatting or whatever, or maybe they can't because you're trying to listen while you're working or something. Just always good to see you guys showing up. Michael, what's up, man? ARM's here. Yeah, Rico, what's up? Michael Williams checking in as well. Man, so good to see y'all here. I tell you, Ryder says good taste in trading can be lonely. YR21, hey, there you go, man. Good to see you here. So, as always, guys, we open up by letting you know that you can join us here at howtotradetowin.com. I need to go there and see how many hours we have of educational material now because, in case you haven't heard, something that I haven't even updated on the site yet is that Tier 3 now, we've done this every Wednesday. We've got this hour-long session where I teach our Tier 3 members some new tip, trick, or technique that can get them into trading immediately, even if you don't have any experience at all, because it gives you the rules to do it. It says, listen, if price does this, then you enter. You put your stop loss here, you put your target up here. And so because there's rules there, you don't have to worry about it. As long as you're following proper risk management, which we also teach, of course, you're going to be okay to go. I teach these things that I've learned over, like I like to say, a quarter of a century of trading now. The first 5 years or so weren't so kind to me, but I've learned a lot since then. It was the desire to learn that's actually kept me in this to do this. You can't. I honestly don't think, guys. I don't think you can be a trader for any length of time if you don't actually get to that point where you say, you know what? Listen, I really want to learn what's going on. There's that certain kind of. You have to really have that drive. But a lot of traders. There are a lot of people who come in and say they want to be traders. They don't really have that drive. What they want to see is some kind of overnight, can I turn... I saw some tweet online with one of the bigger accounts was sharing it, some message to them where the person said, hey, is it possible to make, $2,600 out of $100 in 5 to 6 days? Well, yeah, it's possible. Is it likely? No. But the difference between, hopefully from y'all, since you're here, listening in, and them is that most traders, when they come in, almost all of them basically, that's what they want. They want that little nothing capital to become some huge thing in no amount of time. And if it doesn't, then they think the market's against them. They don't want to try. I mean, really, it's a lack of effort, guys. If you're coming into trading, what you should want to do, one, is learn proper risk management, and two, learn how to develop a system that's going to work for you day in and day out. If you can do those things, that other thing comes. That money, that profit, that increase in wealth comes. But it's not going to come if you're trying to get rich overnight. Matter of fact, I can all but guarantee you're going to lose all your money, and then you'll put in more and you'll lose that as well. So, again, guys, what I try to do here twice a week is to get your mindset right. To get you to understand the realities of trading rather than the nonsense that you see online. I've been talking about it, guys. All your big accounts have been telling you to buy the dip since 63,000 in Bitcoin, right? What are we down to 40 somewhat thousand now? I mean, it's fine if you buy the dip and you're, buying spot and you've got some long-term mindset out there. But if you're trying to get in at a better price, I mean, just buying that dip all the time, you're going to be out by the time, it gets down there. And so, guys, we try and talk about this all the time, but the goal is not to depend on anybody else. The goal is to learn how to trade yourself so that you can make that money and you can, do it day in and day out. but it starts with a change in mindset. And that's, again, what we talk about all the time here, okay? So anyway, you can join us here at howtotradetowin.com. We'd absolutely love you there. Like I said, we've got at least 70 hours of educational content in Tier 3. We've been doing since last summer. Every Wednesday we do that hour-long thing. This week we added in about an hour session on Mondays where it's strictly Elliott Wave. We kind of take a look at new charts, at current charts, and we walk through the process of setting up the count on there, or we take a look at a chart that had a count and the wave subdivided, and then we discuss, okay, well, here's how you look at that, and then here's how you go from there. The idea is to give you a live in-person look at how you actually apply Elliott Wave. It's easy to get these things, to read them and learn them, or watch videos and learn them, but then you get to the market at first and you're like, okay, but this doesn't look anything like those perfect little examples that everybody uses. And so what do I do now? And so the goal is to help you guys with that. So like I said earlier this week, I did finally got around to taking that level 1 exam for the CEWA, which is the Certified Elliott Wave Analyst certification. So if you guys have any questions about that, feel free to hit me up over there in Discord or whatever, and I'll give you, I'll help you out as much as I can of what to expect and whatnot. Not sure when I'm going to sit for that level 2 yet because it's such a long exam. I've got to really figure out the time to do it, but hopefully not too long. And so we'll get that done. By the way, if you're wondering in cost, your level 1 isn't too bad. I think it's like $199. But your level 2 is going to run you about $1,500. But that comes with your whole educational stuff as well to kind of get you to study before the exam. And after that, if you fail it, you can retake the test for, like $250. So a lot cheaper there. It's just the initial that kind of gets you. But it's like all licenses and certifications and whatnot. The pricing is going to be up there. So anyway, excuse me there. Jeez, oh whiz. Man, anyway, hey there. Good to see you there, Josh. Wind Beneath Wings. What's up, guys? And CT, let me see here. Okay, CT, man, sorry, I'm going to get rid of you. Unfortunately, it's just, you guys come in here. I want you guys to be careful. If you ever see somebody come on and say, oh my gosh, you got to jump in this, it's going to go tomorrow. It may or may not, but the reality of it is, guys, that most of those things are just trying to get you emotionally to jump in, and pump the price, and then, you don't know what's going on or where it's going, or even if it's going to, or what their positions are. Many times they've already got positions in there. So they're just trying to get people to jump in to boost that price so that they can get out, with more profit. So just stay away from that, guys. You know what? If you think you want to get into something, don't ever FOMO into something. Step back and look at it and make sure it's a good play. Make sure it's a good time to get in. Otherwise, again, if you jumped in at Ethereum, at the recent high on Ethereum there, what was that, like 2,600? Almost instantly was back down to 2,000. Geez, oh whiz, guys. That's a pretty big drop off that. So, so imagine buying that and then going, oh man. And then, if you've got this sideways for the next month or 3 or something like that, oh my gosh, right? That's tough. That's tough. That ties up money that you don't need to have tied up. Hey there, Snacks. Good to see you, man. And Budman is here as well. Oh, look, Budman says, look, he's even bringing up the CCX has been rallying since 2 months ago. Stop with the hype already. Exactly. So anyway, guys, hey, we'll jump in here. As always, again, I try to give you guys access, when we've got access, or if we find out that EWI is doing anything that you can get free. Right now, let me get this link here. You can jump on this link, and then that'll take you. They've got this State of the European Markets event right now through the 28th. And that's going to get you a whole bunch of stuff here, guys. Go jump on it and check it out. But I think my contact just mentioned that over there, that they were also adding in this really great video by Robert Prechter. He's the he's the guy that started EWI back, gosh, whatever it's been, 40 years ago or whatever. He's one of the eminent Elliott Wave technicians out there. The guy that did this whole socioeconomic theory and whatnot. He's barely ever live anymore, but he did this this chat with what is it? oh my gosh, I can't remember the Institute for Cycles. Oh my gosh, for the study of cycles or something like that. Anyway, and he does this great thing. And one of the things he does on there, and you're going to get access to that. I think she just said that they added that to that package as well, to that free package. All you got to do is sign up with them, guys. No credit card or anything like that. But one of the things you're going to get to, if you've been following me, I posted this chart here, this one right here. And so you often ask me, what's going on? What kind of, you keep talking about grand super cycle and the markets, Chris, and all these things. And what are you talking about here? Well, I'm talking about this right here. From 1788, which was when we ratified the Constitution here in the U.S. to now. All right? That's that 233-year cycle. And most recently, what I keep talking about right now is this wave 5 of the grand super cycle. Wave 5 started here at the end of at the lows of the Great Depression in 1932 to now. Okay? And so what these numbers are, these are Fibonacci numbers, and they show you how they relate to events that have happened throughout here. I mean, some of the ones you might really know, 1987's Black Monday in the stock market, 2000 dot-com bubble burst. You have this that kind of straddled 2007 to 2009. 2007 was the end of that, was basically the start of the great financial crisis. And then, of course, 2009, March or so, was the bottom. And so in 2008, like right there sandwiched between it, would have been, is where that fib is. And then, of course, we've got this here at 2018. 2018 doesn't seem to mean a whole lot. To me, what it means is that's when I started talking to you guys about the stock market, starting to watch for that top, the end of the cycle and everything. It's at that point we started kind of going sideways. By the way, it's also got 2016 here, and 2016 is interesting because that's when, as I've told you guys before, we had some deflation hit here in the U.S. And then it all ends up, as you can see, the Fibonacci countdown comes out almost perfectly all the way down to 2021. No matter how you dice this Fibonacci countdown ends up right here in 2021. So, it may or may not happen, but I would much rather be prepared with something like this, which has a 233-year history, than people today going, well, no, it's the start of a new bull market. I mean, this was the bull market here, guys. This was it right here. There's 233 years. So again, if this is the top here, then we talk about, well, what does that mean? I've talked about depression. I've talked about probably something even worse than what we saw in the Great Depression here. How's the form going to take? We don't know. It could be, a sharp, strong correction down and then back up. But if it's not, based on the length of this 233 years, I mean, in that video, Robert Prechter actually goes on to state that, it could be a bear market for 50, 60 years. I know, and you go, oh my gosh, what? Seriously, though, but it would just be a big sideways market. But because that's this flush out of this whole big move up here. And I know it seems kind of hard to think, right? Oh my gosh, how could it ever be 50 to 60 years kind of thing? And nobody's saying it's going to. Again, even with a sharp move down, it would still, potentially be a bear market for, 5-10 years, something like that. That doesn't mean everything drops consistently for that time. That means it, that market lasts there. So it hits the bottom and then it kind of starts moving up a bit, but you're still in that overall bearish market for that time. So, it's just good to be prepared. Like I said, this may not play out, but this is, if you've ever really wondered what I base my big thing on, it's this chart here that, most of us that I know of in Elliott Wave kind of look at with that whole thing. So anyway, in that video that you'll get access to with jumping on that free pass right now with that link, is you'll get access to the video. It's about an hour long, and he talks about this, and he talks about some other things. He talks about 40-year cycles, which are coming to an end right now. 20-year cycle is coming to an end right now, and all these other kind of things, and how they all just kind of culminate right here around this 2020 to 2022 kind of area. Now, again, if we have something like this going down there, guys, I don't see how Bitcoin does anything right now. Bitcoin should take a huge hit. It is a risk. I mean, at the end of the day, guys, forget what you want to believe. Forget all this little stuff that you guys kind of, focus on with your laser eyes. the reality of it is Bitcoin is very, very risky to be in. And when you have an economic downturn, the first thing that people get rid of are risky assets. And so all these big people, which, I mean, it's not been a lot, it's a few big people that have come into Bitcoin and put in all this money. And you're like, oh, they're our saviors. They're so great. No, everybody evangelizes Michael Saylor, right? But at the end of the day, the reality of it is that's all money that can find its way right back into the market and keep it down and hold it down for a while. And if you think they're not going to do it, if you think they've got some kind of diamond hands or whatever, these silly comments that people use to make their emotional position feel better. And guys, I'm not trying to put you down if these are things you've seen, but realistically, from a psychological standpoint, these terms as laser eyes, diamond hands, all this stuff is what we kind of look at as psychological compensation for that emotional position. All right, it's a way in which you try to justify your emotional position by using those terms that everybody's kind of using, and you find yourself falling into this echo chamber, and you don't pay attention to anything else. But he goes there. He also talks about the possibility of commodities having bottomed last year. And what that would look like and how that could potentially play out as a flat even, which gives us an even larger crash. So we'd have a strong move up, over the next year or so. And then we'd have, from where we've been through into the next year. And then we'd have a strong move back down that's going to take a while and crash even harder than what we hit last year at that lows. Or even just a complete credit bubble pop, which is what I've been talking about, which just takes this nice commodity structure, Elliott Wave structure, into some lower low, which again, it's that whole deflationary spiral kind of thing. So a lot of information, a lot of good stuff in there if you've got an open mind and you're willing to listen. This is somebody who's been doing this for a very long time, and he does it very well. So I would suggest that you guys jump on and check it out. So let me see here. Let me kind of catch up with you guys here. Budman says Bitcoin just gets corrected to the monthly demand line. Why is everybody seems insane about it? I think it's probably got lower to go. I think it, based on the way it's moved so far, I think there's a good possibility it probably got lower to low. So we'll look here in just a minute here. I don't think it's anything big. I think we've still got further up to go overall. I think if anything, we're probably in, let me go ahead and pull up the chart here. We're probably in a larger wave 4 here. The one I thought maybe we might have a little bit further up before we got. I think this might be what we're in here. Locally, again, guys, it's the same chart that we've been following. We're just getting overextensions, it looks like, here on this move down. So right now, again, we've still looked at the possibility of this being a 3 and this being a 4 and this being a 5, or this being an A and a B and a C. But I've got this on the chart, which is the... I guess probably the most bearish of all of them, which is this 1, 2, 1, 2, 3, 4, finishing up a 5 down here to give us just a 3. 1, 2, 3, 4, 5. So when we look at this, and by the way, this actually hit almost to the dollar, hit my where this wave 3, this wave 5 of 3 target was. So we're getting that bounce off that. If I look at it, it looks like we've got 3 up here. So I'm thinking maybe this is 4. If we look at the retracement level on that, you can see that that's right there at about the 38.2. But there's not saying it can't hit up here to the 50. If we zoom in there closer, maybe it's 5 up. Yeah, I can see maybe 5 up. I can see maybe like a 1, 2, 3, 4, 5. And then a B, C, and then moving up here, or even a 4 kind of playing out. I'm sorry, A of 4 here. So then 4 would be potentially, up here around the 50% level at 51,496. And then this would be like A here, and then maybe we've got a flat correction for B. So maybe an ABC down, ABC up, and then 5 more down to around this swing low here at 48,525. And then C up here toward the 50%. But right now, as long as it remains below this swing high here, we can look for potentially to be the top of 4. But it needs to kind of drop below this swing low right here. this 47,839 and 20 cents on Kraken. It's got to get below that to kind of say, okay, we're probably 4 is done and we're heading into 5. As long as it remains above that, it's still vulnerable to pushing further upside. Like I said, in the case of maybe, an A, a B, and then a C, or even, a flat or even a triangle. But, you could have a wave B triangle here. So, you'd have your A, B, C, D, E, and then, of course, that move up there. If that's a triangle, then it's probably not, I don't know that it gets to 50% there. You measure out the height of the triangle there. Now, of course, wave B could, go above where wave A is. You could have a running triangle. But right now, if it's a normal symmetrical triangle, then you're probably looking at the top of my green box here, maybe around that 51,000 area. So we've just got to see how this plays out. Right now, guys, it's just sideways price action. It brings about a lot more possibilities than conclusions until you get that break out of the range, and you can start looking at, eliminating some ideas. Let me see here. Nicholas there says, if the top was an ending diagonal broken down, hey, I'm glad you bring it up. I'm about to talk about that as well. What is the measured target, 42 or 32? Yeah, hey, Sean, good to see you. Dan as well. And Jeff as well there. No, I don't think the suicide rate would be so great if it's a 50, 60-year bear market. Again, guys, it just means depressed markets, basically, in production and everything, as everything kind of, works itself out of what it's built over 233 years, out of the excess in that. Some people are going to be some people. They are going to be what they be, but it's not going to be like, oh, we're all destitute, Mad Max style for, 50 years or something. It just means there's not, it just means that there's not going to be all this huge growth that we've had, for a while. That's all. There's going to be lots of money to be made, guys, especially as we make our way through it, and do that. That's why trading is such a great skill to have if you learn to do it properly. There's so much money to be made, and you position yourself for a heck of an experience afterward. But, again, make no mistake, I'm not saying it's going to be 50, 60 years. And even Robert Prechter wasn't saying that. Actually, he says in the video, I don't know how long it could be. But, there is, you can't discount the possibility that would be some long, and it would be a sideways kind of thing, guys. It's not like it would be dropping for 50 or 60 years. You get your drop and kind of up and you drop and then you back up, and you just kind of would just stagnate sideways for a while. That's what would happen. But, again, if you're a trader, you make money up and down, you're making money still during that time. Okay? So, just understand that. Let me see here. Okay, so let's go ahead and talk about this. Let me see here. Lamb says the more depressed people get, the more people will get married. Unfortunately, but that's life. Oh man, that sounds awful. Bitsmark says, you mean like Europe the last decade? Oh man, Mark, you're right, man. Only smart people say they don't know. It really is, guys. What you'll find out, it sounds kind of silly, but there's that great quote, and I can't remember it exactly verbatim, but basically it says something like, the idiot is always sure of themselves, whereas the educated always questions themselves. It's more or less what I said. I don't remember what it exactly is at the moment, but it is true, guys. And hopefully that's one thing you learn if you're. Let me use a different chart here. If you go on to higher education, you've got your bachelor's degree, which is very the breadth of what it does is very wide. And your master's, you start localizing. Your PhD, you start localizing even more. And as somebody who's been through, through multiple masters and a law degree, I can vouch for this. What you notice is, as you learn more, you you get to realize just how much you don't actually know. Whereas if you don't know a whole lot, you seem to think you know everything. And it's kind of crazy the way it works, but it is what it is. Hey there, Crypto BTC Anarchist. What's going on, man? Let me see here. So again, we've talked about this before. As I've mentioned, guys, I keep telling you, we've got amazing traders, real good thoughts in there, in TWC here. And I wish I could remember who it was, but one of them, I think, had mentioned this idea. is that maybe we've got this kind of ending diagonal going on here, right? And so if it's an ending diagonal, according to Elliott Wave theory, then your initial target should be where the ending diagonal begins. All right, so you'd be looking down here at around, 43,000. Now that's just initial target. That doesn't mean that's where it has to bounce. But in Elliott Wave theory, if you have an ending diagonal, then your first target is generally going to be where that begins. And so, let me see here. Well, actually, let me kind of zoom. I'm sorry. Let me zoom out here a little bit here. There we go. I guess if we actually look at it, that would actually be this 1, 2 here, 3, 4, and 5. So actually, I guess we'd probably be looking closer to this kind of, I guess probably closer to around here. So if this is going to be an ending diagonal, I'm sorry, it's not right here. I keep always looking at that localized. But it would start down here. The idea that you've got this A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5. And so in that case, you would be looking for that to target down here around this, low 30s area. So, if you think that's what's going on there, that's probably where you'd be looking. I don't think that's necessarily a terrible look at it as well. Again, I think with what we're seeing so far, I think there's a good case starting to be made that we're going to have that larger, lower low there that I've been talking about, that larger pullback. But that I still think this would just be 3. This pullback would be 4, and then you'd have your final 5th wave sometime this year kind of going up. But this drop down here isn't going to happen overnight. This will take a bit. And so something I did was I actually, I hadn't been looking at this, but I was talking to, oh guys, let me get on the other chart again. The other night with the nightly updates, with us, you get at least three updates a day for Bitcoin. And so the nightly update I did, I kind of zoomed out here to the weekly because I was talking about something else, and then it hit me. I started looking at the structure here, and I said, well, we've got a change of character right here on expansive volume, on this large volume here. And so usually when you're getting up into a distribution area, you're going to get your spikes of volume either at your preliminary supply or at your buying climax. So I started looking at this and said, well, we've got this here, so potentially preliminary supply here drops down, and then you get your buying climax, and then you have a spike of volume on the drop here, which would be your automatic reaction. And then you have your secondary test up here, and it pulls back, and then you've got this up thrust. And now up at the up thrust, notice that you've got this spike of volume. Again, you've got this 35-40% greater volume here on this top, at the top here. And it's happening at the weekly R3 pivot, so it's happening at resistance. And now you're getting this week, which appears to be a confirmation of a possible reversal. So other things to talk about here, in terms of candlestick structure, you've got a bearish engulfing right here on this last candle. It's a doji, which means a pause, potentially a reversal. Bearish engulfing means pause, potentially reversal. And it's happening right at weekly resistance, which is significant. And then this follow-through, a candle like this is what you need to see to follow through on this to indicate that there's probably a reversal happening there. If you don't have a nice large supply spread candle like this, then it means it's probably just a pause before further up. So it's important to see, how does this candle close this week, on Sunday, a couple of days from now. If it closes like this or worse, I think it adds a lot of credence to the idea that we're probably heading down, down here toward this 30,000 area, kind of this low down here in this range. And so, again, the volume here, look at this. You're getting, almost as much volume here. You've got greater candle spread. So again, supply is in control right now. But we won't know anything for sure until the week closes here. And even this way, it's still very early to know if this is actually distribution or reaccumulation. If it's reaccumulation, we can have this drop down here and move back up as a spring and move back up. Because whether it's distribution or reaccumulation, what you expect to see is this big bit of volume coming in on your automatic reaction, and then you expect to see large volume coming on your up thrust here. So you've got phase A, which is your stopping phase. Then you have phase B here, which is where you have that jockeying for position, that battling it out between supply and demand. So things don't even become any more clear than, just that we're seeing the volume there right now until you're getting into phase C. And phase C kind of lets you know, okay, are we heading lower or not? So it's too early to say if it's distribution or not, but there is some sort of situation going on here, and it does not, especially with what's going on right now, depending on how that weekly ends, wouldn't surprise me to see it coming potentially as low as the 30s. But I'm not saying it's definitely going to yet. Again, there's not enough information going on there yet. Just looking at it that way. The other thing you can look at here is you've had bearish divergence between the swing highs here, and then you had it again between this one and this one, and then you have it again between this one and this one right here. All this bearish divergence happening and overbought here. And so now we're finally getting down below it. At this point, it isn't this low here and this low here, because that would make you think you've got hidden bullish divergence. I would look at this as this low right here between these two, which just shows confirmation of your lower lows in price. That's a pretty big dip down and push back up. And so I think that disqualifies that low from being here. This right here would be, up, because, your dip down here is very slight compared to your dip here. So if we looked at this one to this one, so we've got these higher lows, but we've got lower lows here, that gives you that hidden bullish divergence, and it heads back up. And then we get here, and now you've got these lower lows here, higher lows here, which just confirm this move up. And then you have, if you're looking at this properly, then you have these lower highs here, which are these higher high here. So there's your bearish divergence, and it comes down. So now, again, we looked at this one. Now we're looking at this one and this one. So I don't believe it's this here as a hidden bullish divergence. So if you were doing that, hoping that price goes up from there, I don't believe that that's the proper way to read that. We'll just look at a confirmation of your lower lows in price with your lower lows here in your oscillator. And so, what does that mean? Well, that means right now, again, kind of depends on where we're at here. It gets a little muddled, the movement down here, the wave counts here. So it could head up higher here. If this area right here is wave 4, then we should expect wave 5 of potentially 3 here to target that 45,487 area. Now, what does that mean in terms of everything else? Well, there's a couple of things we can look at here. Because there is no guarantee we're heading down here to 33.6 or 30,000 or whatever, right? As you would see if that is really the ending diagonal, which it could be. We don't know for sure at the moment. But, that wave 3 where I'm talking about here could actually be here. And so this is the triangle we've been talking about, which is ABC down for A, ABC up for B, and then you'll get an ABC down for C. And if that's the case, then my other account, which has this as an A and this is a B, a triangle, and then a C here, could be that. And in that case, you would see price probably move up, whether it's from right here or a little bit lower down here. You'll probably see it move up to this high volume node up here around 56,200 or so. So then you would have let me see here. You would have this ABC as A, ABC is B, and then this would be an A, triangle here, B, and then C is C, and then probably again, A, B, C is D, and then A, B, C probably like that for E, something like that. And so that's still a possibility unless we break down below this swing low here, this 43,020. If we drop down below that, this triangle is no longer valid. So at that point, we look at this still as potentially that ending diagonal, or we look at it as the other thought, which is maybe an expanded flat from here. So again, expanded flat starts out the same way as a triangle. ABC down for A, ABC up for B, well above where wave A starts. And then you're looking for 5 down. So you might get something like, I don't know, depending on wherever this starts, if it makes the 5 down here toward this S2 pivot, you might get a 1, 2, 3, 4, 5 kind of thing. And don't worry about, I'm not saying this is how long it's going to take or it's not going to take. I'm just trying to give you the structure here. But your large expanded flat would look like this. And that becomes an option if the lows are taken out over here. If you take out those lows. And again, the only other thought is that you get down around this area anyway, 30,000 for your initial target off a ending diagonal. So, again, there's not a whole lot here saying up from now. We do have here on the 4 hour, we had this bullish divergence, which gave this current move up here, this candle up. Now that's a good candle. It almost regains all the losses that we had on the previous candle, which was a large drop. But, it doesn't actually go above it. So we could actually see price again get rejected in this area and head down there for lower. If we jump here to the 1 hour, let me see here. 1 hour, you've got all these movements in here, but basically you've got a lower low with price and you've got a higher low here with RSI. So again, gives you this move up, but as you can see, your 1 hour Stochk RSI is almost topped out there and overbought. So we'll have to continue to see how that goes. Jumping in your 15-minute, you would have had your notice over here. You have this bit of bearish or bullish divergence right here, leads up. And then you have this one as well as you get down here. Again, you've got all this in here. But overall, you're getting a progression of higher lows as you're getting lower lows here, which tells you overall what you need to understand from what's going on there. Forget this whole divergence thing and whatever. What you need to understand is when you see this progressive higher lows out of oversold while price is making progressively lower lows, what it's telling you is demand is showing up and trying to overcome all that supply. And most of the time it does. Not every time, but most of the time. So the even better way is to just understand that you do have demand trying to show up there. And you've got, again, in terms of volume, from this first one here, spike of volume, demand shows up. Greater spike of volume at the next low, even more demand showing up. Not enough to take out all the supply that's coming in, but enough to kind of really make itself known and slow this move down here. And then you get to this one, and it kind of goes up. At this point, supply is finally worn out at this point, locally anyway. And we're heading up there. So, that's really what you need to understand as far as how to actually understand what the RSI is trying to tell you. For those of you that are really curious in understanding what's going on with the market, why does the RSI do that? Remember, this RSI measures, if you've got price coming down and, an RSI here, bucking that trend, it's starting to show you that shift is starting to be made from supply to demand. But it doesn't mean it happens, immediately, like you see here in this case. It's got, demand has to show up a few different times before you finally wear out that supply, exhaust that supply, and you can kind of move up a bit. Let me see here. Let's see. All right, let me get rid of this person here because you guys don't come in here and beg. That is the worst thing in the world. Sorry. It just really is. It bothers me. Let me see. Hey there, Pavel. I hope I didn't just screw up your name. I appreciate you checking in from Prague, man. Good to have you here. Let me see here. Kerouac, what's up, man? I am having a great Friday so far. I am looking forward to the weekend as well. Got a lot of stuff to do there. Let me see here. Yeah, I can take a look at some charts here, guys, in a bit. Let me get through all this other stuff first, all right? So this is kind of where we're at with Bitcoin at the moment. Again, for right now, while we remain below, really kind of below this wave E of 4 here, so while we remain below 56,350 kind of area here on Kraken, your bias should be to the downside. If we pop above that, then we can maybe look at, okay, maybe something different is going on. It doesn't mean it definitely is done at a bottom here, But it could mean maybe that ABC that I talk about is completed. So, maybe the C wave of the triangle is completed. So you get 3 up again, toward that level I was talking about, whatever it was I mentioned earlier. Let me find it here, this area up here with the high volume node. So you would get, A, B, C, D, and then E still to go. So don't think that even if it gets above that it means you're necessarily going straight up from there. It could be just more of this sideways chop. A lot of people are losing a lot of money in the chop. That's what happens, guys. It's not fun to trade. I keep telling you guys, depending on whatever time frame you're on, you trade those 1s, the 3s, and the 5s, but especially the 3s. Those are the easiest waves to trade. 3s of 3s, 3s of 3s of 3s. That's where everybody and their grandmother knows the price is going in that direction and they're in. So you usually get the most liquidity right there, and the largest moves usually. So yeah, let me see here. Let's see. So I mean that's kind of where we are there. Again, guys, I'm not here to promise you that the moon's coming tomorrow or that that death is coming today or anything like that. I'm just here to give you a look at the charts, an unbiased look at the charts, away from all that emotional stuff that's going on social media. Because again, if you have been emotionally following those large accounts, they told you to buy the dip here. So we made it's almost 65,000 was the top. They told you to buy the dip at 61, told you to buy the dip here at 60, told you to buy the dip at 59, 8 or whatever. Told you definitely buy the dip here at 51. Told you to buy the dip here, dip here, here. All these places, they've been telling you to buy the dip every time it drops. And then when it doesn't move up right away, when they tell you to buy the dip, almost exclusively, most of them are telling you that that's the bottom. That's what they're trying to project to you. And they're trying to tell you that it's going to go to new highs then. But that isn't the case. Scott does a good job. When Scott's saying to buy the dip, usually, as he continues to remind you, it's with this idea that that you're trying to get, basically just kind of almost more or less dollar cost average into your long-term move up. His position when he says buy the dip from straight up usually is that, hey, listen, it's eventually going higher there. You're just getting a chance to buy in at a lower price and kind of minimize, your entry some. Every once in a while, like everybody else, even like me, it catches you. You think, hey, man, I'm buying the bottom here and it's going to go up, straight up from here. And then you get turned the other way. But for the most part, Scott does a pretty great job of usually when he's talking about buying the dip, it's a more longer term look at it. But most of your accounts don't do that. Again, guys, most of your accounts are very emotional and it's all about, the idea that, if you buy the dip here, it's heading up higher there. So you just want to be careful. You don't want to just buy the dip because somebody says buy the dip. You don't want to just buy the dip because price dipped. The idea is to understand what's maybe going on here, to not, spend all your capital at these higher levels before you can get in lower. Now, like I said, right now, I don't see anything screaming right now that this is necessarily the top. Like I said, I think basically this is just a wave 3 and we're working on a wave 4, one way or the other, those different ways I talked about. And so we've still got a wave 5 higher to go. So don't get all depressive and everything. The price is going down and it's down, what is this right here? It's down about 27% from, a week ago or whatever. It's not that bad. It's just right now it is what it is. Now, that doesn't mean this can't be the top, but I don't see anything right now. I don't see any major technical thing that has happened right now that says that this is the top. And that's what I'm trying to get with you. And so, when you trade, guys, if you're not comfortable with that, then you probably don't need to be trading, because trading is not guarantees. It's not, it's definitely going to do A, B, A and then B, whatever. It's okay, as the evidence shows itself, as more information comes in, you are either gaining more support or less support for your view of what's going on with what's there. That's why it's always so important to understand, however you're trading, where your invalidation level is. It keeps you from holding on while price continues to do its thing, and you're wrong, right? Your invalidation point is not necessarily, it ends up saving you money, But the correct way to think about an invalidation level, where you put your stop loss, is that it lets you know that at that point, you are likely very much wrong with the way that you view the chart is going, and you need to be out. It doesn't matter if price reverses $50 later, because what it says is, listen, the way I was looking at that chart, what I thought was happening is not happening that way. And so I need to get out and I need to reevaluate and then find a new entry. That's what trading's about, guys, okay? So yeah. Let me see here. Oh, Scott Melker. Yeah. Let me see here. Oh my God, these idiots coming here. Sorry that they're flushing the chat here, guys, with their nonsense there. Remember, guys, at the end of the day, the goal as a trader should be to learn what's going on so you can do this yourself. Because even if the person you're following ends up being correct much more than they're wrong, first of all, if you don't know risk management, you're going to lose a lot more money than you have to when they're wrong, right? But second thing is, what happens if they end up sick one day and they can't show up and can't tell you to get out of a position? What happens if they just stop doing it anymore? I'm going to tell you what right now, guys, being in social media is very it's very taxing. Tax, what a word to use after Biden yesterday, right? But it does. It takes a lot out of you. And you just get to a point, especially if you're really, really involved with social media, you just get to a point where, man, I need a mental health year. I need to get away from it for a while. And then what happens to you? Then you potentially lose a lot of money, right? Or you miss a great entry, right? So the goal is always to learn what to do. That's what we do over at TWC, man. It's always about helping you guys learn. So that way you don't have to depend on anybody. Even when you learn, you can still look at other analysis. I mean, I do all the time. I have my my opinion of what may be going on, and I always look at other sometimes even more experienced traders than I am, and sometimes not. But in terms of years, but I look at what they're seeing and seeing if maybe I've missed something. It's possible, guys. We can always miss something. So don't think that just because you become a trader that all of a sudden you shouldn't be, monitoring what other people are, seeing and how they're seeing it and their reasoning and whatnot. Again, as a trader, guys, the goal is to be fluid, to be able to accept that you may be wrong and that something else may be going on. And then that way you can change for it, right? Let me see here. No, crypto BTC anarchist. You talking about grand super cycle? No, that fifth wave should be in progress right now, finishing, is what we're looking at potentially this year. Zoom back to the beginning of the video, either now or when we're done here, and I actually bring up Robert Prechter's chart and show you what I'm looking at as far as this whole cycle, 233 years. It's a great little chart there. You can see that there. Let me see here. So anyway, so that's kind of what we're looking at there with Bitcoin. And by the way, guys, if we do have some, if this does play out and, we've got this major top, this grand super cycle top, and then we've got this more extended bear market, whether it's 5 years, 10 years, 50 years, sideways, whatever, that in itself does not necessarily mean that Bitcoin goes away. As a matter of fact, at this point, I'm looking at it, if it were to happen, as a great opportunity to set up my final, for me, being in my, going on to my late 40s here, my final big bang, my final big getting in at the bottom potentially of something and allowing that to ride off, for my kids. And so that's the way I'm looking at it at the moment, if that is to happen and it doesn't go out. Now, obviously it could. Again, guys, Bitcoin's never been in a bear market. It's never, a big economic bear market, a depression, recession, anything like that. So, there's nothing to say that it will, survive it. But there's nothing to say that it won't. And that's the important thing to get here. When I say things like that, y'all usually hang on you're saying it's going to die. No. I swear to God, I have met more people that don't know how to listen since I've been doing this publicly for the last 3 years than I ever have in my life. If your default, guys, is not to think about what you're going to say before you say it, life tip here, change that. You're going to find a lot of pain in life if you can't think about what you're going to say before you say it. Okay? And again, I tell you this stuff because I believe that how you are in life is how you are in the markets. And so if what you're doing in your life is not conducive to living your best life, to making, the best choices and whatnot, then that's just going to spill over in trading. And you're going to be upset and you're going to be accusatory toward, everybody's just stealing your money from you in the markets and whatnot, when in reality, it's just you. It really is your fault. It's not that anybody else is doing anything terrible to you. It's just that you're not doing the things that you need to do, paying attention, understanding things as you need to understand them, because you're too quick to jump on, the emotional I'm hurt bandwagon. It seems to be a big thing that's prevalent in society these days. Everybody's offended. Everybody's hurt. I don't care. I mean, it sucks that you're offended, but you being offended is all on you. And if you're offended by something that you shouldn't be offended about, that's the big thing. That really comes in the whole idea of not paying attention to what's actually being said and done there, and just kind of jumping to emotional replies. So, again, guys, if you want to be better than the markets, be better in your everyday life. It will help you guys, okay? Let me see here. What's going on there, James? He says, your account may change slightly if you put in on the line chart for a minute. The triangle would turn into a larger degree fourth, which would be better for geometry. Yeah, but again, the problem with the line charts, guys, and this is something you want to remember, the problem with line charts is that they discount what's going on in wicks. And a lot of your most important information comes in your wicks. Okay? It's not to say that line charts are not usable, you shouldn't use them or whatnot, but it's just you need to understand that if you're going to use line charts, you are necessarily not going to have 100% information in your chart. There is a lot going on. There's a lot being said in this wick here that you're not going to see if you turn this into a line chart. There was this wick here. There's a lot of information in that wick that tells you a lot about what's going on there. So, again, guys, I'm not a big fan of line charts in general. I think line charts are good to give you an overall general trend idea. But for me, somebody that comes from the background of volume and price analysis, the line charts are, going to end up giving you a lot of misinformation. Or, the misinformation is going to be derived from the lack of full information, I guess is what I'm trying to say. Yeah. So that's my thought. That's my thought about that. I'm not saying that watching line chart is wrong. It's just that, after, a quarter of a century I've been doing this, to me, line charts are really good for understanding the trend, whatever time frame you're on. But to rely solely on it, again, loses all that information in the wicks. And to me, there's a lot more information in the wick than there is in the body of the candle. So yeah. Yeah, that ending diagonal was something we've been talking about, but nothing. Again, that's a possibility as price goes lower. I think that becomes more and more likely. But there are other possibilities prior to that, which is what we've been looking at. So we've been given these target areas with your invalidation levels. As long as you don't hit those invalidation levels, you keep looking at the lower target levels. And that's worked out really well here. It's gotten us well down from, that 65,000 down here to 47.5 almost so far. So yeah, definitely a possibility though with that potential ending diagonal. Sure. So anyway, that's that right there, guys. If we look at the DXY here, so I've got this shown. I'm still, again, nothing here changes anything. Still looking at a leading diagonal off here, coming back down here. The question is, are we done? Are we still working on it? So, right now it's possible that it could be done here. So wave 1 and then A, B, C is an expanded flat, or as a flat here, I'm sorry, which bounces around the EQ of this 1 hour demand structure right here. And so that gives this move up, but we're getting a strong pullback here. And so I'm not very convinced about that. We would need price to actually go above wave B up here at 91.419 to say that this is likely a 1, 2, and then you got a 3. And if that happens, if this continues its rally up here, your wave 3 minimum target will be 91.828. Now, the other possibility is this arrow here that I'm showing you. And this would suggest maybe a 1-2. And then let me make sure that this isn't higher up here. Let me see. That's a 92, 325, 92, 330. Okay, so just barely higher right here. Okay, so in that case, you might have a 1-2 here. Then you've got a 1, 2, 3, 4. 1, 2, 3, 4, 5 gives you a 5. So now you've got a 1, 2, 3, 4, and you've still got 5 to go. In which case, this is 1, 2. This may be 3, 4, and then you may be getting a 5 down here. I mean, you could say the 60, it's the 61.8 here at 90.80, but potentially at the EQ here at that 65% at about 90.666. So 1, 2, 3, 4, and it can get you a 5 potentially here as an ending diagonal. Again, yeah, A, B, C is 1, 2, and then, this might even be A, B, C is 3, and then 4, and then A, B, C is 5, maybe even get down a little bit further. The thing is, we've got room here for it to continue to pull back if it needs to. There's nothing going on here that says this is definitely, heading down to new lower lows. Matter of fact, nothing there says it probably is. Right now, it is still well within a normal wave 2. It hasn't even hit that 61.8 retracement yet. So still watching to see if we get the move off here, if we come on, head down a little bit lower here, and then get the reversal off. So that's kind of where we are with that. Let me see here. Bitcoin dominance. Let's take a look at that. Let's see. All right. So, yeah, James, you're not saying anything I haven't already said, man. You can jump back to the beginning of the video. You'll see my thoughts. Yeah, they're all there. You're just, you're just kind of rehashing what I've already said. Yeah. So I'm not in disagreement with you. So I just kind of took a quick look at this the other day, and I haven't had a chance to. I had planned to go back in here and make sure this is correct, but I haven't had a chance yet. But so we're going to show it here, and what I'm seeing right here is that I think we've got 5 up. It looks like we've got 5 waves up, and it looks like we're completing 3 down. Now it's possible it's bouncing right here at the 61.8. So that's definitely possible. Okay, James, no worries, man. Yeah, so, it's definitely possible this could be the bottom here at the 61.8, just below the weekly S2 pivot. We are down below, back down and oversold, and, we're about bottomed out here and oversold, trying to curl back up, stoke RSI. So it's possible. But if it's not done, we'll see, this Bitcoin dominance drop down here toward 70.5. Excuse me. And that's right there at the weekly S3 pivot, right there around 46.73. But in either case, and especially if we're pulling back for that larger pullback on Bitcoin that I was talking about, I think that's, has a real good chance that we'll see this heading further back here. But in either case, we're close, I think, to a reversal on Bitcoin there. And so, again, looking at the idea that Bitcoin is probably still have another leg up, I think this kind of supports that. And if we make it down here toward B, then, wave C becomes equal to wave A here at 85.03. So that's, that might be where I'm looking for that dominance to pop up to before it finishes off and, everything kind of heads down. But again, that would be that whole last 5th wave sometime this year thing coming up and kind of doing that, I think. So, yeah. But anyway, so I think that's kind of what we're looking at here. Again, does look like an ABC right now. Probably, a 1, 2, 3, 4, and then a 5 is what I'm thinking may be going on here. You can note, again, that right here at this first drop area here, you have demand picking up. And then it drops off after this, it drops down, and then it kind of picks up again right here. The week still has a couple of days left in it, so we might see volume get equal to there or maybe even above. But for right now, it's a little bit below. But you can see that demand is showing up. It just hasn't exhausted, that supply is the way we would look at it. Again, this is the Bitcoin dominance chart. So, read that as you want, but understanding it in the same way. That downside pressure is still dominant, but that upside pressure is starting to make itself really kind of known. So, yeah. There we go. That's what we've got right there with Bitcoin dominance on that. If we jump here, what do we got here? Coin. So I warned against buying into coin yet. I suggested it was probably headed lower there. Watch for the breakdown of the channel here. And so that was what day was that? That was Tuesday last time we talked about it. What was Tuesday? The 20th. So we were over here. I said potentially we could get a bounce here, but I said until we're getting back above that, it's still likely, vulnerable to head lower. And I said if we lose this support here, it's coming down there. And so based on the height of this range here, the target is that 274.71. That doesn't need to be where it ends. As you can see, this 1 hour candle was a nice little 1 hour candle. It opened, it gapped down at the open and then wrenched its way back up and kind of did this bullish engulfing here. But you can also see that, it's taken a lot of that Stochastic RSI to do that. So we might, you might just see a 1, 2, 3, or, an ABC here that gets rejected in this kind of area right here. So let me kind of change that color there real quick, make it stand out a bit. Yeah, so you might see that rejection up here around the bottom of this channel. And normally that's what you would expect. If you drop down through support, you usually expect a recheck of support as resistance and then continuation down. So I don't know that I necessarily believe that coin's going to go up, I think it's limited upside right now. I don't think that maybe this is the bottom. I don't necessarily think that's the bottom yet. I think we've probably got further to go down there. As far as 15-minute goes, that might be it. That may be 1, 2, 3. So ABC up there. You might have a 1, 2, 3, 4, 5, and up here. We're below the 15-minute pivot. It is what it is. Now, had you paid attention right here, you might have seen this bullish divergence showing up at the beginning there, and you could have bought for a short-term trade. But remember, guys, when you're trading in stocks, as a lot of the Wall Street bets people and Robinhood people and everybody else is starting to find out, you do have to worry about those wash rules. And so, you may not be able to claim losses and things that you think you have because you buy and sell the security, multiple times within a 30-day period. Usually you have to wait for a 30-day cool-off before you buy, you sell, wait 30 days before you buy again. Otherwise, that rule comes in and it limits your ability to take losses. So people are racking up these huge losses that they can't actually take because of that rule. So again, guys, not financial or advice or anything like that here, or legal advice, but I'm going to tell you what, because it's not, you definitely need to go in there. If you don't know what you're doing in the market, you need to go in and find out what the rules are. It's like any other game you play, right? You have to know what the rules are before you jump in there. Otherwise, you have nobody to blame but yourself for whatever potentially happens. Let's see here. Where is the next chart here? Let's see here. Let's take a look here at the NASDAQ here today. We'll jump on that. Come on. There we go. Here we go. All right. So, big drop back yesterday. Looks like we completed an ABC here. And it stopped like basically about $2 above that invalidation level. And now we're back up here above B, so we should be good to go with the wave 5 in play right now. Generally if we measure out wave 3 here, kind of do your wave 4 there, it gives you right up here around that 14.6 area for your possible minimum wave 5 target. And potentially a secondary target up here, 14 794. So yeah, I'm still thinking we've probably got further upside. It doesn't guarantee it. With this being 5 down, it is possible that maybe we've got an ABC here and an ABC down, and then we're getting 5 up here. So if there's a rejection before we get to the swing, before we get to this all-time high, and price drops back down below that swing low, that'll tell you that that this wave 5 is probably this right here, and we're headed down lower there, because that would be an A, B, C as a flat correction there. So that's still possible until we get above the swing high. But I think we've got a good possibility of heading up higher there. I mean, you look at your 4-hour Stochastic RSI, it's well down here and oversold. So I could definitely see that happening. We're still well within the upper half here of this ascending channel. Yeah, give me some time here. I'll get to XRP there. I've got to try and remember these you guys are asking about. Let's see what we've got as far as time goes here. Let's see. Right now, again, the other index that we track here, this is actually, the other one is the NASDAQ. This is actually the E-minis for the S&P. So these are, what people are trading, actually. And of course, we've got this 1 up and 2 down. There's a couple of ways to count this in here, and nothing's really exciting. Nothing really goes, oh yeah, that's definitely how you count it. But it does appear that this is 1, this is 2. We got the move up here. So if correct, we're looking for a minimum wave 3 up here of 42.14. As you can see, again, we need to get above this swing high here at 41.8350 to really kind of cement in that we're moving up, in that next move up. But that gives us a minimum wave 5 up here at around 42.37. Going on with that. Any thoughts on the possibly coming tax increase for the rich up to 40%? Plus, yeah, almost 50%. Oh, stupid. Final pump, end of year, and total exit from the market. Well, I want to say, everybody says, oh, it's impossible what you're talking about, Chris, this grand super cycle, this depression, all this stuff. And yet, you've got these things staring you guys right in the face. The way in which these taxes will be applied are going to change the way in which the wealthy use their money. And it is likely to lead to a lot more volatility in the markets. Scott made a good point the other day, a good general point, where he said, if the... let me think how he said it. He basically said, as far as long-term capital gains tax goes, right now you're rewarded for holding investments because you get a cheaper long-term capital gains than you would if you were just trading daily and you have to pay the short-term capital gains. But if your long-term capital gains becomes pretty similar to your short-term capital gains, there's no incentive to hold over time. There's no tax incentive to do that. Which means, again, you might see people getting into much more active management of their money, so a lot more trading in and out, because at that point, again, you're not getting that tax savings. So, it could lead to a lot more volatility in the market. And so when you start thinking about how could these things possibly happen, Chris, everybody's euphoric. Look, the market keeps going up. Oh, everybody's saying Bitcoin's going to $1 million. But everything's going to happen, Chris. What are you saying? You're crazy. Am I, though? Maybe I'm just seeing things before you do. Because at the end of the day, all this euphoria, all these markets rising at the same time, this is much more a symptom of a credit bubble overextended than it is anything else. And this euphoria with traders and choosing to trade rather than work because it's so easy to make money, right? Right? And your kids on TikTok giving financial advice, like heaven forbid you guys saw the Doge one, right? I posted that on my Twitter timeline there, or feed, or I don't know, whatever the heck you call it. God, I'm so old, aren't I? But anyway, I posted there, and he was talking, the day before 420. 420 was Doge Day. Oh, yeah, we're talking about $100, but not even $100, $1,000, because if my thesis is right, and I think it is, Elon's going to put a whole bunch of money into Doge. He's going to pump it up, and it's going to make us all rich. And so many people bought into that. I have friends who don't normally get in the markets who were buying into that on 4/19, thinking it was going to go to the moon overnight, basically, the next day. And wouldn't listen to me. They wouldn't listen to me. That's what it is. This kind of thing, guys, I keep pointing out the stuff that we're seeing over the last year, especially. And, now we're talking, I've talked about so many sentiment indicators and whatnot that are reaching all-time highs, even beyond what they saw during the right before the 1929 top. And, nobody wants to listen. Everybody's like, oh no, it's a new paradigm. We're going up. It's a new bull market. And it doesn't make a lot of sense. It really doesn't. But what does make sense is this belief that it is, and all this stuff going on is, that euphoria, that retail euphoria you usually get at the end of a cycle. Now, the difference being, obviously, in this point, you even have the larger money managers and whatnot who are also joining in the euphoria. Some of them because, well, what do you do with money? You've got to make money, right? So you put it in along for the ride. But many of them claiming the same thing. Now, are they being, honest with you when they say, oh, yeah, a new bull run or whatever? Or are they trying to get you to buy in there and keep pumping it up so they can continue to make returns? Who knows? But at the end of the day, when you see the larger money starting to mimic the same kind of euphoric behavior that you're getting from retail, that's usually the signs of a much larger top coming in. And so then you look at things like, the potential tax increases and all this stuff coming in here, and all of a sudden, it makes a lot more sense that there might be something bigger brewing, something bigger changing, something bigger happening, as I've been discussing, leading to things that people don't want to believe will happen, that think they can't happen. Again, I'm not here to guarantee you it's going to happen, but until it proves that it's not going to, that continues to be my thesis. And the sentiment, indicators and all these things going on appear to support what I'm saying. So we'll see if it works out that way. Let me see here. So that's what we've got there as far as that tax increase. I think it's just part of everything going on here, guys. Remember, when you look at the world through the lens of, again, what Prechter's termed socioeconomic theory, this idea that what's going on with the masses, how they're feeling, is reflected in the things that happen, then you start paying more attention, and you start noting that it's not just the financial markets that are having all this crazy stuff. Look at all the civil unrest that's going on. And it's everywhere really in the world, but here in the U.S. we can speak about it, and I can speak about it specifically because we deal with it daily. You have the presidential election and the thoughts there between people who, like Trump and people who like Biden, or at least people who don't like Trump. You had the whole thing that happened with the Capitol. You had over the last year, last year plus, you had all the riots and everything and the protest. You have these whole anti-police things going on now. I mean, it's this whole thing, guys. There is something changing in the fabric of what's going on in society right now. And when that happens, you're going to get those changes in the market, because the market is just a reflection, a broad-based reflection of the mood of society. Because when people determine whether they're going to buy or sell, it's based on that social mood. What are people thinking? How are people feeling? If people are feeling, one way, then you're going to do one thing. If people are feeling the other way, you're going to do the other. Because, again, when you just look at the market and the market's dropping and everybody's feeling depressive, nobody wants to buy, right? Nobody wants to buy until it's up there at all-time highs, right? Same idea. And it just kind of proliferates throughout everything that we do, guys. So you see all these changes going on. You see them in government. You see them in finance. You see it in just society and the way that everything, comes through, and the way people are thinking and the way people are acting and reacting. So, yeah. Mark liked that Doge guy. He said he was classic. I have a solid feeling Doge is hitting $1,000. Yeah, that kind of sucked. But see, and like I told you, though, even my friends, people who know what I do for a living, They know I do well with what I've been doing for a living. They still didn't listen. They still didn't listen. I can't think of one person that didn't listen to me about that. Here's what it is, right? It just goes to show that as human beings, we're generally driven by emotion. And that emotion becomes much more potentially detrimental when you don't actually understand the system or the game or the market, whatever that you're in. Yeah. Is that Ihardo? Or IJ? I'm sorry, I'm not even sure how to pronounce it. I'm sorry. But he says, looking at the DXY chart, counting from January 6th low, the move up that I've labeled as a potential leading diagonal is also labeled by a corrective ABC by many. Is there a way to differentiate and have a higher confidence, which is correct count? No, you're absolutely correct. It's what I've talked about as well. Again, as I mentioned, guys, right now, it works out fine as a leading diagonal. The pullback for the wave 2, there's nothing, weird about it or anything. Let me kind of zoom out here real quick here. But yeah, it is possible to potentially count this as maybe a 1 and a 2, and then a 1, 2, an A and a B, and then a 1, 2, 3, 4, 5, maybe as a C. Yeah. And that's that possibility where it may dip a little bit lower, where this may just be 4 on this move down here rather than up here. That's why I keep telling you guys, you've got to get above this 4 over here, this 94.742. If you get above that, then that marks this as the bottom. There should be no question about it at that point. Now, with this being an ABC up, the other possibility, especially if this is a 4, is that this is a potential WXY. So you get ABC up for W, ABC down for X, and you'll have an ABC up for Y. And so it'll take it higher. That's a possibility as well. So even if this is potentially an ABC here, it doesn't mean that it's necessarily done at this point. So, again, you want to make sure that you guys understand that as well. As far as the daily goes, we're, just above oversold here on the daily RSI. Stoke RSI, of course, down and oversold. There's a lot of argument in there for, a stronger bottom to be nearby putting in or where it's at, as it heads up there. But locally, what you want to see, of course, let me see here. Locally, what you need to see is potentially, from where it stands right now, you want to see a move above this wave circle 4 is the first clue that this local bottom may be in. But again, ultimately, guys, as I've been pointing out for a while now, you still need to see this move above this swing high over here. You got to get above that. Until that point, this is potentially an ABC, and then, 4 is complete and we got 5 still to go, or this is still potentially ABC even a triangle or a flat or a double zigzag heading up there, with a W and then a 3 down for an X and then 3 more up for a Y. So a lot of possibilities still that I could see this go higher and still not be bullish off the lows of the year. But there is one thing, usually, one thing to pay attention to is at the beginning of the year, many times is where you'll see currencies reverse. So, if you think that's the bottom, there's a little something to add to support there as a possibility as well. Yeah. Just some thoughts on that. Let me see here. Let me kind of catch up with you guys. Elon, Snoop Dogg, and more all were pumping it because it's fun. Yeah, if they get in, see, the real thing is, guys, you got to be careful. I keep telling you, man, you guys got to be careful who you're listening to online, because when you have somebody like Elon who can basically kind of nudge prices around with a tweet, you have to understand that for what it is. Again, most people still seem to believe that Elon backs Dogecoin, that Dogecoin is some company and he owns a lot of stock in it, like he's a major holder in it. That's what they're thinking. Most recently, I think I heard people were asking if Doge was going to buy Ethereum. Literally, guys, this is what's going on. When I talk about, retail exuberance and euphoria and a top coming in or whatever. I mean, these are the things that you notice. People that have no business being in the market are in there. They have no business being in it because they have no clue what they're doing or what they're talking about. At the end of the day, heck, Doge is just a meme coin. It was made as a joke. We all know that. If you've been in crypto for for a few years, you know that. Maybe if you haven't even been in that long, you still know that. So the idea that it was going to become some great, financial regime changing currency, it doesn't make sense, right? But, the people who are new to it, they don't understand. They just say, oh, look, it's going up and everybody else is talking about it, so I need to get in on it. But that usually happens when things are at a top. For Doge, there you go. Right? Oh, yeah, Doge is great to transact in, sure. And there's a lot of businesses that accept it. Yeah, I definitely agree with that. But at the end of the day, I mean, this idea that, again, the people coming in are thinking that these are companies. And, again, that like Elon owns a majority share, basically, he's backing, or some huge bit of backing of the Doge company. And so when you buy the Doge stock, it's going, like the stock market. And then, oh my gosh, this is going to buy Ethereum now. And now Doge is going to own Ethereum. And, it's just that misunderstanding with it. They have quite the active GitHub all of a sudden. Yeah, everybody interested in it. But yeah. What's up, Lewis? He says, Elon kicks it off and the scammers run with it, a pyramid-like scheme of pulling suckers in. His Twitter feed full of buy Doge. Ray Martini, what's going on, man? He says, Doge really taught me, like the saying, it's not what you know, it's who you know. Well, it doesn't matter about a coin's FA. It's about how many people know about and will ape into it. Yeah, again, guys, and if you need proof that the crypto market really it isn't about fundamentals. It really is about, oh gosh. There I go. I was on such a good roll there, right? And this happens when you get old, guys. But anyway, to think that it's, to understand that the crypto market really is, gosh, dog it, speculation. There we go. That's the word I'm looking for. It really is. I keep telling you guys that. I got a lot of people, oh no, this company's going to change this, it's going to do that, and it's the next this and that. And guys, you know what? At the end of the day, guess what? That's the same thing people were saying with the ICOs in 2017 before the top. Seriously, many of y'all were there, There is nothing being said about the companies today that is any different than in general what was said about the companies, all those ICOs in 2017. But, again, either people were there and they choose not to remember that, or they choose to, or they just they weren't around back then and they haven't done any homework. They just jumped in the market because somebody told them they could get rich overnight, or they saw a TikTok telling them they can go rich. Like I said, the other ridiculous TikTok I saw was somebody up there. He says, "This is how you turn basically $100 into $1 million," and he goes in and he says, "If you only get a 3% return every day." And you compound that every day. Guys, trading isn't like that. Some days are not tradable days. And you're going to be wrong, especially if you're new, more times than you're going to be right. So this idea that you can, mechanically get 3% returns every day is it's asinine. It's ridiculous. It's nonsense. Don't put yourself in that position to where you believe that nonsense. Because you're going to lose a lot of money with that, all right? Again, this is the difference between what most people are going to tell you in social media and whatnot and what I tell you. I'm more interested that you guys actually want to learn the truth and want to understand how to be traders. And it's not because, again, I keep telling you guys, not because I'm some sort of, what's the word? I can't even think what the word is. I don't do it just because I'm just that kind person, I get something out of it. If I can turn around next year, and I've got 3 more people saying, man, Chris, with your help, I've really learned how to trade and I've done so well for me and my family. Man, that's for me. I mean, that's great. I'm glad it happened for you and I'm really honestly excited for you. But at the end of the day, that's for me. That makes me feel great because I had a part in that. And there's something to be said about, feeling like you're making a difference in somebody's life. But most people don't get that. They think, altruistic, that's the word. They think you have to be altruistic. They think you have to do things without concern for yourself. Nah, most of the advances we have in life and the world, guys, are because somebody did something for them. Either they like the notoriety of being, a doctor, say, or something like that, or, they like the money, or whatever it is. I mean, there's something there. There's something that they're getting from that. And that's okay. That's okay. It's because of them that we have air conditioning, that we have indoor plumbing, that we've got, all these conveniences that we have, that we're at this point today where everybody's soft and complaining about their feelings, that everybody's feelings are hurt, and there should be laws to change things so their feelings aren't hurt. There again, we talk about old adages. There's that old adage that says, tough men, tough times build tough men, which lead to easier times, which lead to easier men, not as tough men, which then creates tough times again, which then creates the need for tough men to develop. And that's what it is. That's the cycle, guys. It is what it is, whether you like it or not. And so we're at that point where the world is full of a lot of not so tough men in general. Again, everybody complaining about their feelings are hurt, as if that means anything. Yeah, okay, I'm sorry that your feelings are hurt. I feel a little bad for your feelings are hurt, but your feelings are just the way that you interpret what's going on. And so if you've got something screwed up in there, you get a little imbalance in the brain, or not a clear understanding of what's going on, and your feelings are hurt because of it, it leads you to some erroneous results. Okay, that's on you, man. That doesn't mean the world needs to be changed to suit your feelings. So again, and I talk about this life stuff because, again, as I said earlier, how you view and act in life has a direct effect on how you do in the markets. And if you're not realistic, and if you're not somebody who's willing to put in the time and effort and to really pay attention and to, all these things that are required to become a good trader, you're never going to be. If you think it needs to be done for you, or you say it's too hard, but yet you've only been in a week and you haven't really learned anything, then, again, that kind of mindset is going to cause you to lose all your money, and then you're going to leave thinking it's some kind of scheme to take your money from you. And I guess eventually it becomes one, if you don't take care of it and change those things, right? Hey there, LXT. Good to see you, man. Mr. No-Go says we need a 40-year bear cycle. I'm sorry. You said to make men tough again. I thought you said to make me tough, you tough again. And I was kind of chuckling at that. I was thinking, man, how old are you? I don't know that I'm going to be around in 40 years. So, yeah. Aaron Quinn, what's up, man? It says, do you think alts will rally between Bitcoin's current correction and its ascent to wave 5? Or is alt season not likely to happen at this point? I mean, I think if Bitcoin, again, I guess it depends on which alts you're talking about. Many times you get the bulk of your alt USD, USD pairs that'll move at one time, and then your alt BTC pairs will move at another time. I think if Bitcoin does some stabilization and some sideways movement, as usual, that's a good proxy for some great alt, for some great alt movement. But alts have been huge already. We've had alt season already, probably more than once at this point. We've had insane returns on alts, off the lows and everything. So, I don't know. Again, alts tend to follow Bitcoin anyway. If you'll remember, 2017, Bitcoin ran up to its all-time high there around December 17th, I believe. And so about a month prior, that alts really started kicking in. And then they extended and kind of hit their all-time high right around January 8th or so, a few weeks later. We could always see something like that. But there's nothing here that says that Bitcoin has to have that same run-up that it had in 2017, the same kind of sharp move up. I think it's probably more likely than not at this point, but it does not have to. There is no guarantee that it's going to do that. And if it doesn't, how does that affect the alt pairings? We'll find out. But, I've seen a lot of alt pairs because, I do a lot of chart requests every day over in Discord for our members, our 2-3 members there. And, a lot of USDT pairs are, pulling back for a wave 4, getting ready to do a wave 5. All BTC pairs, a lot of them are coming down for their wave 2s, it looks like. So maybe, wave 3 is getting ready to start soon or something like that. So, just a lot of the ones that I've looked at, that seems to be kind of where we're at more or less. So, yeah. Hey, Mark, that's exactly right, man. It's up to you to make a change in your account balance. That's right. But, again, guys, trading, we always talk about it. Trading is simple, but it's not necessarily easy. It's simple because all trading really is price moving between liquidity. That's really, at the end of the day, that's really all it is. And Elliott Wave gets us a way of understanding how that price action may be playing out. Because people's moods and whatnot tend to fluctuate the same way. Okay? But it's not always easy. Because you have to fight, especially if you're newer, with all that emotional stuff going on. And make no mistake, guys, I always talk about it, but I don't mean to ever say that it's easy, that it should be easy to get beyond your emotional feelings and whatnot. It's tough, especially at first. The more you do it, it's like anything else, the more you practice it, the better you get at it. But at the end of the day, it's not easy, especially in the beginning. Which, again, is why risk management is so important. Because you need to take especially if you're new, you need to take the position that, one, your trade's probably going to be wrong. Doesn't say it's going to, but it's probably going to, right? Because you're new, just learning, whatnot. Two, that your emotions are probably going to come in at some point. So as long as you can work on the thing that you can control the easiest, which is your risk management, you'd be good to go. But even with that, you still have to get out of the old, I'm not going to make $1,000 on this move, so I need to ignore my risk management and just use a large position size so I can do that. And then you lose your money, right? Don't want to do that, guys. You need a lamb? You need a hug there, lamb? Hey, just do this, man. One arm here, and just hug yourself, man. That'll help you, buddy. How about tough women, or do we need to send them back to the kitchen? Oh, man, I am not even touching that. You can have fun with that one, Hank. I don't know, man. If I had to choose between Link or Wi-Fi for scalp, which one? I don't know. I haven't looked at their charts, clear enough, whatever. And then, is it Link USD and Wi-Fi USD, or Link USD and Wi-Fi Bitcoin, Link Bitcoin and Wi-Fi USD, or is it, BSD pairs of both? I mean, yeah, there's a lot in that question. Hey, you're welcome. Glad you think it's a great stream, man. Glad you think it's a great stream. I honestly, Lamb, I haven't looked at that between Link and Wi-Fi right now, so I really don't know. I haven't done any real research on them. I'm not trading either one of them at the moment, so I don't really have one on there. A good answer for that, unfortunately, at the moment. And I'd rather tell you that than just throw something, pull something out of my rear end, and then have you think that that's gospel there and go for it. Let me see here. So again, looking at all this stuff, gold. A lot of people talking about gold. They think that gold and silver are going to do this. That they're starting this new advance. I don't think they are. I think they're ending the rebound right now, is what I think. So gold here, the current count sits at a 1,212 here, just below the 50%. Maybe done, maybe not. We definitely need to see an initial drop below wave 4 right here at around 1764 or so. That would be the first clue it's probably done. Now, one thing I can look at is the fact that we've actually dropped through the channel support, and that's a very subtle clue that top may be in. So we'll look for further downside there. But then we would need it to drop down below wave B down here to kind of say, okay, to add confidence to the count and say, okay, 1, 2 is done, and then we've got a 3 down here with a minimum target of 1348. Until that time, it's still possible it could go higher. And with that in mind, again, it's this move above this wave 2 swing high up here at 1962.50, pushing out above that would add confidence to the idea that this ends up just being an ABC here, and you've got another move up. Not a whole lot different with silver. I think people are even more bullish about silver, just sentiment on in social media right now. Excuse me. But again, same thing kind of going on here with silver. Potentially the top's in up here. I did have, I was looking for it to maybe reach up here to 50%, but, again, we're getting this strong move down. But we need to see a drop down below this, again, the whole channel thing, below the channel support, which, also means below this wave 4 swing low right here at $25.67. And that would be the first clue that the top may be in, but ultimately you need to get down here below wave B at $24.68 to kind of add a lot of confidence to the account and say, okay, well, we've got wave 3 in progress now, heading back down here below $20 and setting up that, continue to move down. So that's kind of where we're seeing with that there. Nothing's changed for my, my silver and my gold long-time views. Nothing's changed on that at all yet. So, again, still expecting gold to drop down below 1,000, silver to drop down below 10. We'll see what happens. But that's kind of where we're at the moment here. Let me see here. Yeah, Hank, I think, I'm sorry, Mike. Looks like Hank answered your question there. You said, can you get in debt on the exchange if you trade on leverage but lose more than you put in? So in other words, what Mike's asking is, if you're trading on leverage, can you lose more than what you're putting in there? So for crypto exchanges, no. For crypto exchanges, they have their de-risking engines on there. And so once you drop their liquidation engines, and once you drop below a certain point, they go ahead and liquidate. Some of them liquidate everything. Some of them try to just liquidate what they have to. And there's pluses and minuses to both sides. If you liquidate all positions, then you're definitely out. So if price keeps dropping, you're good. If the exchange only liquidates enough to keep you in the game, then as price continues going down, you'll keep getting liquidated further and further down as it goes. And it can eat a lot more of your capital that way. So I think I saw a thing recently about FTX there, where somebody was mentioning that they didn't liquidate their entire position. They were grateful for that. And Almeida went on there and said, responded and said, yeah, we just try to liquidate what we have to. But unfortunately, with most traders, again, there's a real lack of understanding how markets work. And so when they, when those liquidations happen, because they don't know what's going on, they just leave the position in thinking, it's going to pick back up. And then it keeps dropping lower. And then so then you have that partial liquidation again and again and again and again. You end up losing a lot more than what you would otherwise. So, yeah. So just some thoughts on whichever one, just making sure whatever exchange you're on that you understand how they liquidate you and at what point. I think like Kraken, if I remember correctly, you'll get a liquidation warning at 80%. So when it drops to 80%, you'll get that. But usually it seems they don't usually liquidate until you hit like 40%. So the 80% is, hey, they give you this email that says, hey, you might want to add more to your margin there because you're dropping below 80%. For Forex or whatever, if you use like forex.com, I know they give you a notification if everything drops below 120%, and then they liquidate you at 100%. They liquidate your entire position. But that's just Forex. That's how forex.com does it. So again, it depends on the exchange, the broker. Excuse me, hiccups here. And then, so, we'll see how that all works out there. And then, of course, like Hank says, you've got, depending on what exchange you use, you may have isolated margins, you might have cross margin and all that. So, yeah, there is that as well. Lots of different stuff to understand when you guys jump in. But again, this is what I'm trying to explain this stream here is that we've got all these new traders in here who have no clue what they're doing. They have no clue how the markets work or the exchange works that they're on, and then they just end up losing money or going into huge amounts of debt. For instance, I think I saw a story recently about Robinhood, where somebody found out that they thought they were up, but they found out they were down like $700,000 or something. And they end up committing suicide, unfortunately. First of all, guys, understand, especially here in the U.S., if you find yourself in that position, it is not, I think anywhere in the world, it's not worth it. But, again, guys, there are no debtors' prisons here in the U.S. anymore. Worst case scenarios, maybe it's something that you end up having to pay back at some point, but, it's definitely not worth taking your life for, guys. All right? So just make sure that you understand how the market works and the broker or the exchange or platform you're using, how they work. And that way, before you get in, you aren't going to find yourself in those types of situations. All right? Let me see here. Lamb says, Chris, you remember when I joined your Discord group, I was asking about leverage. The pros told me to stay away from it. Never traded with it going on 3 years. Yeah, again. And it's not, guys, and that's a great thing, especially if you're new and you're not comfortable with your skills at the moment. Completely that you can be, consistently profitable all the time, doing everything. But, leverage itself isn't evil, guys. But it's how retail players usually deploy leverage. That's the problem. And I did a session on this one point for everybody, a public session. But at the end of the day, if you use leverage, rather than using it to take your, what would normally be, if it hits your target, $100 profit and making it $10,000 of profit. So if you're not, just over leveraging an oversized position anyway, and instead you use leverage, first of all, as counterparty, is to reduce counterparty risk, which is real important in crypto, because remember, if you've got crypto on exchange and that exchange gets hacked or whatever, you could lose your crypto, period, right? So protect yourself against that counterparty risk means you use leverage, but you decrease your position size. So if you were going to have a position size of $100, that means you have to put $100 worth of crypto on that exchange. That means it's always at risk of being hacked and stolen, right? Or like what happened in Canada, I keep bringing this up, where the head of the company ends up passing away, and he's the only one that has the keys to the wallets, right? So that counterparty risk is always there, especially in crypto. So if you want to trade a $100 position, you would normally just put $100 there, right? But the problem again is that you could lose all that if it gets hacked, right? The alternative is to put a $10 position with 10 times leverage. You get the exact same result as far as your profit goes. But if the exchange gets hacked or whatever happens, or something, I don't know, some crazy tech thing happens and it's lost, well, now you've only lost $10 instead of $100. But using that 10 times leverage, you've still got the same targets, the same structure of your trade. And if you're using 10 times leverage, that means your return on your dollars is greater. If you have $100 and your trade would make you 100%, make you all you've made is $100, right? If your trade's going to make you 100% of movement, if it's going to move up 100%, if it's going to double where it's at, you only make it 100%, right? So if you use a full $100 position, you're only making $100, right? So you're getting that return, right? If you use $10 at 10 times leverage and it goes up to that same target, now you've made a greater percentage return. You're still only making what you're only making, but you risked a lot smaller bit of your capital to get that larger return. So your percentage return is much greater than it would be if you used that full spot position. So anyway, that's just a real quick primer there on leverage, guys. It's not that leverage is necessarily bad. It's just most traders, especially retail, are tempted to use a lot of leverage with a large position size. So there's no real risk management going on. And by doing that, they get stopped out a lot sooner than what they should. So yeah. top most reliable 3 exchanges for leverage. Well, I know you're in the U.S., Lamb. So, Kraken, Kraken gets a lot of heck. They've really worked real hard. It seems like most of the wicks, those big, huge wicks that you see now, are not actually liquidity issues. They're just technical issues with the software. So they're not real positions. So, it used to be everybody's like, oh, every time, you had something like that, like, oh, look, everybody's getting liquidated and whatever. And it doesn't, that isn't the case. So, it's good. And Kraken limits how much, leverage you can use on, bigger pairs like US or like Bitcoin USDT or USD, Bitcoin USD, Ethereum USD, and I think XRP USD, maybe whatever. You can get up to 5 times leverage. On other ones, I don't know what they are, but some of the other ones they have. I think Litecoin, maybe you can get like up to 3 times leverage. But then the leverage also changes depending on if you're using a USD pair or a USDT pair or a BTC pair. You have to make sure that you understand what you're doing there with that. So you're kind of limited to how much leverage you can use anyway. But, for US traders, it allows leverage in the US. And so, it allows you to get that. Now, the other way to use leverage, I'm not saying you can't use leverage to increase your potential returns. The other way is that you can use a little bit of leverage to do that. So more than just be on the counterparty risk, you can be able to use that leverage to, increase your returns. But you have to be, the more leverage that you're using in that way, the stronger you have to understand risk management because you have to do it properly. Otherwise, you'll end up getting liquidated before you should get liquidated, before you would think you were going to get liquidated, and you lose your position before price just continues in the direction you wanted to go anyway. So, yeah. Hey, have a good day, Mark. Have a great weekend, buddy. Does Coinbase have leverage on Prime? I don't think they do anymore. I know they did for a while, like when it was called, what was it called, GDAX or whatever back in the day. 4 years ago, 3 years ago, something like that. They did have up to, I think it was up to 3 times leverage, I think. But I don't think they have it anymore. So, I don't think they have it anymore. I don't know if FTX and Binance US sites have leverage. See, the problem with that is when you offer leverage like that, they're here to U.S. citizens. You have a lot more law, a lot more regulations that you have to follow in terms of what you can and can't do and all these things. And so that's why most exchanges don't, first of all, why they don't even offer to U.S. citizens to use, but second of all, why they don't offer leverage. You were talking to a U.S. trader the other day who said Coinbase Prime has leverage. They might have it back. I haven't, like I said, I hadn't heard that they did. I just know they used to, and then they got rid of it, and then they all re-upped with the whole Coinbase Prime thing and whatever. Oh, by the way, update, guys. It only took me 4 months, but Coinbase finally fixed the issue we had, and I was able to withdraw our company's USDC off their Coinbase Commerce site. Oh, man. It takes them almost a month just to get your initial reply to an email. There is just, man, and these exchanges, they come and say, oh, well, we've just had a lot more support issues than what we normally do. You know what? Jump off, take a short walk off a long plank, or take a long walk off a short plank, because that's not an excuse. This is your business model. You have people, it might cost me more today to move that money because I have to pay Ethereum to do it than it would have when I first wanted to withdraw it. So now you've costed me money. You've cost me money now. Costed? Jeez, oh whiz, I'm having a bad day. So yeah, but they finally did get it fixed. It seems to be anyway. Thank God. But seriously, I may just change it to where we can only accept Bitcoin. But Bitcoin prices are pretty high to move stuff around too. But I don't want to get caught in that again where we're holding, thousands and thousands of dollars in USDC, or even tens of thousands of dollars, sitting there and I can't access it. I can't, pull it over. I've got people I've got to pay. And I ain't paying them out of my pocket. What are you talking about? That's what profits from the company are for, right? It's what you pay your people with. So anyway, yeah. Oh, XRP. Yeah, let me look here real quick, man. I'll do that, and then I'm going to get out of here. Let's see here. XRP. Oh, let's see. Sorry, let me click out of this for a minute. All right, what do we got here? Larger count going on here. Whoops. Of course, as Sean was saying, I update these every day there for our members. This 4 hour looks like pretty good. It looks like did we get a dip down in here? We got a dip into oversold. We're down here in oversold, so that's a nice little move. Let me see here. Let me kind of zoom in a bit. If it'll do it. All right. So we got a wick a little bit further down here than what we were looking at initially. I think I mentioned the green zone, didn't I? Yeah, from yesterday's update, I said continued decline below this target here. Brings up the green demand structure EQ at around 86.72 is the next downside target. So 86.72, we hit 86.80. Pretty darn close, right? Not too bad. Oops. You kind of look here. All right, let me kind of zoom this out a bit here now. So that gets us around almost to the 61.8. I think there's a good chance that this could be done. But what we're going to need is a move above this this wave B here. Yeah, come on. There we go. That's $1 and basically $1.42. We need to move above that to add confidence to the idea this is done. Until that point, we could still see this roll over further down. Let me see here. What do we got here? I mean, you could maybe get a 1, 1, 2, 3, 4, 5 here, maybe. Out of that. So maybe it's like a 1, 2, 3, 4, 5 gives us a 1, 2, 3, 4. And then a 1, 2, 3, 4, 5 coming down. So there's a good possibility that it could be. Let's see, something sooner before that. What else would I be willing to look at before that? Let's see here. Let's see how this breakout was. That clean? I'm always looking for a clean breakout of that resistance. Kind of dip back into a little bit, but that's looking pretty decent there. Man, I'm going to tell you right now, though. Nope, I'm going to tell you right now. This really looks like an ABC right here. This looks like we've got an A, B, C, D. Oh, wait, I'm sorry. This is A up, and then this is A, B, C, D, E. And then this is C. And you've got that, potential reversal candle, shooting star kind of thing going on. Reverse dragonfly with that high bit of volume following next. So it didn't happen at the top here. This gives you a warning that it may be reversing on low volume there with that structure on the 15-minute, but then you get your volume and the follow-through on that next one there. And it comes down here. So right now, to me, this looks like an A, a B, and a C. So it looks to me like we've probably got the same kind of thing we had on Bitcoin there, the overextension. How else could we look at that thing? Because that would then give us, that would mean that this would have to be an A, and this would be a B, and then we'd probably have a C still coming down. Let me zoom out here a bit. I've been looking at this as possibly a 1, 2, 3, 4, 5 here. But if this is going to be 3 down to end, that would suggest a wave Y. The triangle could be wave X, which would mean this would have to be a wave W here. I guess maybe I guess maybe this could be let me see here, A here, and then ABC, ABC, 1, 2, 3, 4, no, 5 ABC, and it's just a short C. It wouldn't be a flat because it doesn't get down here 90%. But I guess if I was to look at that, I think maybe this could be an A, this could be a B, and then it looks like we have 5 down here for, or 1, 2, 3, 4, 5. 1, 2. Yeah, it looks like we may be able to get a C out of this, which would then suggest that this is an A, and then this is a B, and this would be a C. So the other way to look at that would be this ABC down would be a W, and this 3 up would be an X, and this move down would be a Y. I'm not right there. I guess it'd be 1, 2, 3. So X right there. Make sure this isn't the high. Let me see where these highs are real quick. 17, 45, 24. 17, 46, 91. Yeah, so this if this is going to be an ABC, that'd give us a W, and then an ABC up for an X, and then an A, B, and then 1, 2, 3, 4, 5 thing coming down here for a Y rather than an A. And then that would be a WXY. And it doesn't actually have to be like this. I guess you could probably look at this as, this could still be the A here. So this just gives us a WXY down for A. I guess this is what I'm trying to say. Yeah, here we go. So this would give us a WXY down for A. And then we have a triangle for B. And then we'd have what amounts to an A, B, and C coming down for Y. And so if that's the case, I think we've got this, the 61.8 is right here around this demand structure in this wick here, this EQ at right around 82.5. So I would look for 5 waves down into that, and potentially this range high here. This red range high, which comes off of this high up here at about 76.95. So those would be the 2 targets I'd watch if we get a drop down below that swing low there. But I think that would complete it then. I think that would complete it. Now, if we just get this from here and it continues to go up, then we've potentially got, a different count in there. And so maybe like a 1, 2, and then a 1, 2, 3, 4, 5 gives us 3, 4, and 5, and we head up off there. So like I said, ultimately it does look like we've only got an ABC right here right now. So we're going to look for a drop down below wave E here, which would be this 15-minute S1 pivot right around $1, 2.5. And that would be the first clue that we're probably heading down. But again, dropping through that low there then gives us those 2 targets. However, if price continues up from here and gets above this wave E, which is right there around $1.42 almost, if we get above that, that'll tell me that the bottom's probably in and we're heading up there. So yeah. Unfortunately, I can't, Michael. I've got to get out of here. It is 1:05. So, common man, no, I'm definitely not saying that. But anyway, there we go, guys. Hey, listen, I appreciate you all jumping in. And joining in here. As always, we'll be back on Tuesday at 11 a.m. Central Standard Time. But if you want to get, all these more relevant, shorter term updates and whatnot, and, chart requests and chart critiques and all these great things, and not to mention well over 70 hours of educational content, join us over at howtotradetowin.com. Tier 3 is where it'll be. And as always, guys, again, I've told you this day in and day out, you're not going to learn to trade overnight. You're not going to learn to trade in a month. So if you're serious about learning how to trade, and, you're serious about putting in that effort for, a more extended period of time, then for any of our tiers, you can get cheaper rates if you come in with more. If you come in with quarterly, biannually, with every 6 months or yearly, we'll give you, larger and larger discounts off your average monthly cost to kind of help you out with that. But again, guys, at the end of the day, I don't want any of y'all thinking you're going to learn to do this overnight. It's going to take time just to learn it, and then it's going to take time to perfect it and to work on with it, guys, okay? So as long as you guys can get that in and really kind of understand that, I think you guys will be all right with trading. That and the risk management. Gosh, make sure you guys learn that risk management, all right? You guys have a great day. Have a great weekend. And if you're in Discord, I'll see y'all over there in just a bit. If not, again, like I said, hopefully we'll see y'all on Tuesday. You'll have a great weekend. Remember, the only thing you control in the market is how much you lose. That's it. Risk management's what it's all about, guys. Take care.